Dan, so good to see you. I want to dive into the headlines today, talk through the markets and geopolitics. When will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. So, as we keep that in mind, I do want to pull up this visual from FinViz, which shows the 1 month performance of the S&P 500. Why do we tend to see stocks fall first when tensions rise?
Oh my goodness, Erin, when tensions rise, people get nervous, they get afraid. There's what you call a flight to safety or quality. They sell their stocks and they buy bonds. And oftentimes it's instincts and emotions that are driving these decisions. They're oftentimes the very wrong thing to do, but that's where sometimes our instincts and emotions take us as investors.
And we're going to dive into that more in a second. But for investors watching these headlines and rising oil prices, what's the most important perspective we should be keeping in mind before making portfolio decisions?
Yeah, of course, Erin, you're going to hear always from any prudent advisor to take a long-term approach. And the reason that the advisors tell you to take a long-term approach is because there's always some chaos of the day. You know, we're coming off of six out of 7 years, the market's been positive. And that's been great. People have had robust returns in their portfolios. But then guess what? We start out 2026 and the market's down about 5%. Now, you know, we get a little bit of news today and the Dow jumps up 1,000 points. And so there's always something like that, some chaos du jour that are driving the news and the headlines. Invest in my opinion, Erin, what is happening during times like this, there's a large transference of wealth that's happening from those who are panicky, emotional based investors that gets transferred over to disciplined long-term investors that have a plan, a path, and a strategy to follow.
I'm really glad you brought that up because that is my next question, which is emotional investing, right? For those who don't have a plan and make decisions based on how they're feeling rather than on data, tends to be a bad decision. Explain why.
It tends to be a bad decision because the markets are very unpredictable. In fact, even the best and brightest that try to predict these markets, they get it wrong more than they get it right. Let me give you an example, Erin. Going back to 1980, the markets had 38 different times that the market went down 10% or more. And each and every time, the market recovered to reach all-time new highs. So if the market dips down a little bit, 5 or 10%, of course, people start thinking, what's wrong? What's wrong? There's nothing wrong. It's not supposed to go up all the time. It's designed to work over time, not all the time. Go back to 1926. The markets as measured by the S&P have been positive exactly 77% of the time. That's more than 3 out of 4 years. If you could go to Vegas and play those odds, you should go to Vegas as much as you can.
Right.
Because it's a winner's game over time if you play it the right way.
Right. And if you have that financial plan. Well, Dan, if somebody's feeling a little bit stressed by the headlines and would like to sit down with you to create that financial plan that's in line with their risk tolerance, what's the best way to reach you?
Erin, I think quickest, easiest way to reach anyone on our team, on our advanced planning team, is just call the office. It's 281-466-4843. If you're a client of ours and you want to just check in and go, am I set up the right way? Is everything okay? Have I had a change of life or circumstances? Call us and let's talk. We need to connect. We need to look at your risk profile. We need to examine your portfolio and make sure it's perfectly tuned for you and your needs for the long haul so that you can reach all of your goals and not stress out about money.
Right. Good point. Having that plan does mean peace of mind. Dan, thank you for your time today.
Great talking to you, Erin.